What's going on YouTube? Hayden back making another brand new Crypto TV episode. In today's video, we'll be continuing our review of the Deeper network. Now, specifically today, we'll be unboxing and reviewing the Deeper Connect Pico and its antenna, as well as deciding whether it makes sense to buy this device in order to mine the DPR tokens, which is Deeper's native currency. Now, Deeper Connect is quite a remarkable project in the crypto space, and their staking program is even crazier. Now, also, have you guys heard that Fidelity, the nation's largest provider of 401k plans, said that it would enable its participants to put a slice of their retirement money into Bitcoin if their employers are willing to allow it? I mean, with this cryptocurrency market growing more and more mainstream, I've been spending countless hours looking at up-and-coming crypto projects, trying to find some that really just have potential in the space. Now, Deeper Connect seemed to be one that not only got my attention, but thousands of others. Now, a few days ago, I had made a video reviewing the Pico's bigger brother called the Mini. Yes, the Mini is literally the bigger brother to the Pico, for those that are wondering. But now, since this will be a continuation video, I highly recommend watching the previous video that I had made, because I really explained in depth about the company and how Deeper's mining operation actually works. Now, I will be covering a little bit today, but watching that video will really give you a better understanding of things that you might find confusing in today's episode. I also want to address that the previous video I made on the miner, I actually gave you the incorrect break-even point for staking their tokens, and I want to go over that today and correct it with you in today's episode. Now, guys, with that all being said, definitely make sure to smash the like button for the YouTube algorithm, turn on post notifications, subscribe, and let's dive into today's episode. So to start, Deeper Connect and the Deeper network represents the world's first decentralized blockchain network for building a truly private, secure, and fair internet. Now, acting similar to a VPN, the Deeper Connect network is called a DPN for a reason. And this is partially because they don't actually charge a monthly fee subscription, and it's a one-time purchase, which is actually really cool. Now, more so, the Deeper Connect is called a decentralized private network, or a DPN, because rather than running all your web activity through, let's say, a company's private network that you would mainly get on a regular VPN, a DPN actually lets you be your own client and your own server without the need for a middleman. And therefore, you still enjoy fully encrypted data transfers and web access from anywhere in the world, all without depending on outside servers or getting your data logged. And by the way, you know what else you can do from anywhere in the world? Smashing the like button for the YouTube algorithm, so YouTube and I know that you want to see more content like this. Now, the Pico comes equipped with an enterprise-level cybersecurity service that shields from viruses and Trojans, prevents malicious tracking, detects intrusions, and even restores safety online. And they even have a 7-layer enterprise-grade firewall. What's even cooler is every Deeper device comes standard with ad blocker, and this means that it can block encrypted ads such as those on YouTube, as well as block annoying ads and pop-up windows, and allows you to return to a pure internet environment. And the Pico specifically is also the smallest and lightest VPN-like device on the market today. And the best part is it actually allows you to earn passive income by sharing your bandwidth through Deeper's network, and by sharing your anonymous bandwidth, you can actually earn Deeper's DPR token that you can stake or sell at any time. And this is also the only way to access Deeper's staking. Unlike other websites, you have to actually purchase one of their devices in order to access their staking program. You can't just go through their website. Now, the big difference between the Pico and the Mini is the amount of throughput you get for your internet service. Now, the Mini actually allows up to 100 megabytes per second bandwidth, which is not anything special, but given its portability and use outside the house, like traveling or in a hotel, it's actually a worthwhile trade-off. But in comparison, the Mini has actually a 1 gigabyte per second max bandwidth and is not meant to be used outside the home, which is about 1,000 megabytes per second. You can see the massive difference there. But the cool thing about the Pico, unlike the Mini, is that you can deploy it in one of 3 ways. Now, the first is in virtual wire mode, and the Pico connects to your modem and router, serving as a bridge between the two and encrypting or routing all the traffic that goes through your local network. And the second is in router mode, which means you can plug the Wi-Fi adapter antenna into the Pico and then connect the device itself to a modem or router. Now, this actually turns the Deeper Connect Pico into a Wi-Fi router itself, to which you'll connect, routing all your traffic through that DPN service. And lastly, the third is the wireless relay mode, which is extremely useful for traveling, since you can plug the Pico with the antenna attached into your laptop. Now, when accessing the public Wi-Fi network, all your online activities will be securely encrypted and routed through the Deeper network via the Pico, securing your connection. Now, this is really great for people who want security when on the go and don't actually want to lose their privacy or risk getting their internet tracked when connecting to public Wi-Fis. Now, remember, guys, you can pick up your own Pico with the link down in the description. them, and they are currently selling the Pico and the antenna actually bundled for only $225, which is different than a couple of months ago. Now, to actually earn DPR tokens with your Pico is quite a lengthy process. The first step involves purchasing the DPR tokens, 1,000 at a minimum to be exact, and then purchasing the tokens really isn't that difficult if you have some experience in the cryptocurrency space. But if you do find it challenging though, let me know down in the comments below and I will make a video showing you actually how to purchase them. And if you go onto CoinMarketCap and search for the token and then click market, you will actually see all the listed exchanges to purchase the DPR tokens from. Some of them you can see are PancakeSwap, Uniswap, KuCoin, Gate.io, which all seem to be like the best and most reputable options. Now, in order to actually get your Pico on the Deeper network to mine tokens, you will need to buy 1,000 DPR and stake them. And this is the cheapest way to begin. Now, once on the Deeper chain, your miner begins with a credit score of 0. And from here, your miner needs to grow its credit score from 0 all the way to 100, which takes about 200 days before any Deeper can actually be earned, or DPR. Now, the cool thing about the Deeper network is they offer a way to bypass that whole thing by staking 5,000 DPR. To skip the 200 days, it would take you to earn a 100 credit score. Now, this seems to be the most promising and also incentivized, obviously, by Deeper. And as you can see by the chart, the more you stake, the faster you will break even. And unfortunately, this can be quite costly for some people, as staking like 50,000, 60,000, or even 80,000 DPR tokens can cost a few $1,000s. Like take, for example, 80,000 DPR tokens. With the current rate of DPR being only 6 cents, the price is $4,800. Now, I want to address some things I mentioned in my previous video about staking their tokens. In my previous video, I mentioned how long it would take to actually break even if you did decide to stake your DPR tokens, and I want to correct myself. Now, the term staking is a popular way to earn passive income with your cryptocurrency investments, and I'm sure you've all heard of it by now, as there are thousands of programs out there that offer staking on their website. Now, when you guys stake your tokens, you actually lock up your coins in order to participate in running the blockchain and maintaining its security. And in exchange for that, you actually earn rewards calculated in percentage yields. Now, the key word here is lock. Remember that, lock. This is the part of the video that I actually forgot to include. And what this means is that after a certain amount of time, you will actually get your previously locked tokens back, which changes the whole break-even point. Now, for my research into how long that lock period is was actually quite difficult to find on Deeper's website. And what's interesting is it doesn't state it anywhere on the page that you actually stake your tokens on, which is a little confusing. And this is why I was, really confused and originally thought that the tokens staked were pretty much staked forever, which gave me those break-even point numbers in my previous video. Now, after a little bit of time, however, I was able to find an article put out by Deeper which actually explains their process. Now, it states all the way at the bottom of the article that if a participant does not make the cutoff for a particular phase and chooses to no longer participate in the event, they'll be able to unstake and claim their DPR back once the Genesis node event is finished. And stakers who are selected as a Genesis node will not be able to redeem their DPR back until after the 9-month period. And they will have the option to renew their stake for another 9 months, stake more, or claim their tokens back over a 3-month linear vesting period. So if I understand this correctly, you will have the option to withdraw your locked tokens once you hit 9 months, but you will not be allowed to withdraw them all at once. Does that make sense? Now, they will be distributed back to you over a 3-month linear vesting period, which means you won't officially have all your locked tokens back until 12 months later or 1 year. Now, that 3-month linear vesting period means that they will equally distribute the amount you've staked over the 3 months, so you won't get the entire lump sum back. So in short, pretty much, they are locked for approximately 1 year from the time you originally staked your tokens. So to break down the math and to correct myself from the last video, with the price of Deeper still at 6 cents, the Pico device plus the 1,000 DPR network fee comes out to $285. And that's because the 1,000 DPR tokens is $60 when you do the math, and the Pico is $225. So $225 plus $60 gets you $285. And also, when you consider the mini and the network fee, it comes out to about $385. Now, guys, to bypass the 200-day wait period and to get your credit score to 100, you need to stake an additional 5,000 DPR at a minimum, and 5,000 DPR staked actually comes out to about $300 when you also do the math. Now, this means at that rate, you will earn $60 a year, and it will take you almost 5 years to break even, with the assumption, obviously, that you can get your original stake tokens at the end of the 5-year period after, reinvesting and reinvesting and reinvesting year after year after year. On the 5th year, you let it play out, and then you can withdraw your earnings. So consider it'll probably take close to, you'll break even in 5 years and then get your money in 6 years. If that makes sense. Now, this can be sped up if you do continuously reinvest your profits, however, back in, similar to dividend reinvesting. But remember, you won't be able to withdraw your last investment until 12 additional months have passed. Now, on the other hand, 60,000 DPR staked is $3,600, which earns you $1,800 a year, or $4.95 a day. And that's honestly not a bad gig for staking. Now, that means you will break even in only 57 days. Literally less than 2 months on your investment. And since the setup only costs $285 and you'll be making almost $5 a day, you can break even pretty quickly. Just remember, the catch is you won't be allowed to withdraw your original $3,600 that you've invested and staked into the website until 9 months later, and then it will be distributed back to you over an additional 3 months, totaling 1 year. Now, I'm not really sure how such a high APY is sustainable in the long run, and we'll see how long, Deeper decides to keep this staking program open for. Consider making $1,800 a year on a $3,600 investment that's guaranteed is like a 50% APY, and that's really high considering the S&P 500 is only like 10 to 12% a year on average. And obviously the math is based on the coin being currently 6 cents, but if obviously the price deviates higher or lower from that, obviously your break even will be different and it will vary depending on that. So just keep that in mind. Otherwise, as you can see, the Deeper network is quite the miner, and it comes with great utility and a way to make passive income. And the Pico itself is not expensive, but if you plan to earn any realistic profit from this miner, expect to invest at least a couple $1,000s. But if that is okay with you and you specifically believe in the long-term success of the network, then it's definitely a good option for passive income. But with that being said, guys, if you have any questions, feel free to leave them down in the comment section below. Otherwise, make sure to smash that like button for the YouTube algorithm, subscribe, turn on post notifications, and I'll see you in tomorrow's video. Peace.